Hey, it's Mike Hambright with FlipNerd.com. Welcome back for another exciting expert interview where I interview successful real estate investing experts and entrepreneurs in our industry to help you learn and grow. Today, I'm joined by John Burley. He's a real estate investor that has completed over 2,000 transactions, is primarily a cash flow investor. John has received recognition from the likes of Robert Kiyosaki and Tony Robbins and was actually a featured author in a recent Donald Trump book called Wealth Building 101. And John is an expert at raising money in addition to everything else. And that's what we're going to talk about today, is how to raise money. It's going to be a unique experience. We've talked to some folks about raising money in the past. But what John is going to tell us is how everybody is primarily doing it wrong in our space. And he's going to teach us some new lessons here where you can actually get paid for raising the money you need for your business and not necessarily always paying somebody else. Before we get started, though, with John, let's take a moment to recognize our featured sponsors. RealtyMogul.com is an online marketplace for real estate investing, connecting borrowers and capital from accredited and institutional investors. Get a rehab loan fast and close in as little as 10 days with rates starting as low as 9%. For more information, call 888-296-1697. B2R Finance makes loans tailored specifically for rental investors. They can help you unlock equity from existing properties so you can get cash to grow your rental portfolio. That's huge, and it opens up lots of opportunities previously not available to rental investors. Need a loan? Call 855-819-4412 or visit b2rfinance.com today. National Real Estate Insurance Group is the nation's leading provider of insurance to the residential real estate investor market. From individual properties to large-scale investors, National Real Estate Insurance Group is ready to serve you. We'd also like to thank Crestar Funding, Mid-Atlantic IRA, and Renters Warehouse. Please note, the views and opinions expressed by the individuals in this program do not necessarily reflect those of FlipNerd.com or any of its partners, advertisers, or affiliates. Please consult professionals before making any investment or tax decisions, as real estate investing can be risky. Hey, John, welcome to the show.
It's great to be here, Mike. Thank you so much for having us.
Yeah, glad to have you on. So you came highly recommended from a guest that we had on recently, and we're always excited to meet new people. So, hey, before we get started talking about raising money, which obviously is a critical part for every real estate investor, you got to have money to be in this business, or it's certainly a whole lot easier if you have it, right? Why don't you tell us your background? You've got a very kind of rich background and an exciting story. So can you share it with us?
Yeah, I come out of Wall Street, financial planning industry. I had my own brokerage with my own team and stuff. So I look at the money side very, very different than anybody I've ever met in this space. I started investing in real estate back in the early 80s. I formed a private equity company at the end of 1989. Private equity company would be kind of like a hedge fund or a family office in today's vocabulary. So I was doing this way before it was even talked about. And obviously the reason I was able to do it is I took what I learned from Wall Street in business and you applied it to real estate. And one of the big things that's always missed in real estate is the money side. Like you, when I started, most people were like going, hey, kid, go find a great deal. And you find a great deal, the money will come to you. And I found that wasn't really true most of the time. Yeah. And so we just focused entirely on the financial side, the money side, what made a business model work. And so what we do is foundationally and fundamentally quite a bit different. And it's certainly blessed us and given us lots of avenues and opportunities. So looking forward to sharing with you guys today. Yeah.
And tell us a little more about your background. I mean, I know you've done a lot of transactions. And you're definitely kind of a sought-after speaker in this space. Tell us some more of the sexy side.
Yeah, so the sexy side for me in my life is I don't do a lot of the educational stuff. And the reason is there is a lot more money doing deals than there is teaching about them, just flat out. I do 3 events a year in Phoenix. We also have coming up next year we have our 24th annual Burley Boot Camp, which is the largest running real estate investing training in the world. On the sexy side, I wrote a book, Money Secrets of the Rich, which was actually in Australia and New Zealand, the #1 bestseller. We actually outsold Harry Potter for a couple weeks.
Wow.
And we spent 10 years on the bestseller list, 3.5 years at the top of the business bestseller list. So really, really a lot of that. I mean, I've worked with Robert Kiyosaki. Bob and I are dear friends, the rich dad, poor dad guy.
Yep.
I'm not speaking out of turn because he said several times on the platform, I'm actually the guy who did his real estate deals. So the model I use that we'll talk about today, where I have an investor come in and they put up all the money and they sign for the loans, and they pay me to do the deal. Robert Kiyosaki was just one of those many investors of mine. And so those of you that are familiar with the Rich Dad and all that fantastic success they've had, the properties that he actually bought and brags about were properties that he did with me, the majority of them. He put up the money, I did all the work, found the deals, and we split it right down the middle 50-50.
Wow.
Which is what I've been doing with investors for, 25 years now.
Yeah. Yeah. Awesome. Well, tell us, like you said, one of the challenges for a lot of real estate investors is they're typically taught if you find a deal, you won't have a problem selling it, you won't have a problem raising the money, all those things. Of course, one of the challenges is it's hard to buy with confidence if you're not certain that the money's there. I mean, everything gets a lot easier when you can buy with absolute confidence that you'll have no problem doing the deal, which is counterintuitive to a lot of folks, right?
Yeah, boy, you said it. Such a truth there. Here's the deal. When I started, I probably started like a lot of people, listening right now. The internet hadn't been invented yet. Al Gore hadn't done that yet. But what I did is, there was a couple books on creative real estate investing. There was a small amount of seminars, but not a lot. And I went and I learned as much as I could. And, and they all were basically teaching the same thing, how to buy a house, how to flip it. And it was with no money down. And what they're really teaching in hindsight is they were teaching a pipe dream. They were basically teaching me to go out and try and find a needle in a haystack. And what I found is that sounded really good to me at the seminar because I wanted what they were selling. It didn't work so good in the real world. First of all, most real estate agents didn't want to work with you at all if you don't have any money. Right. And today they've all figured out that those proof of fund letters that anybody can download on the internet aren't real. Right. So they know that. So they don't work. So what they wanted is they wanted real money. And then I went through it and I struggled. I did some deals. I went full time in '89. I did 42 deals in the first 6 months, which was great. But I also was doing a ton of work that didn't work. And then it was kind of like, wow, John, you come out of Wall Street, you understand how to raise money. Why aren't you doing what you'd learned? So I got so caught up in the real estate hype that I had forgotten about what actually made a business work. If that makes sense?
Yeah, absolutely.
Yeah. So we could take these 100, 200, 300, 1,000-page business plans. And if we were to put them all together and we look at the businesses that succeeded, they had three common elements. The first one is that, they had a good idea or a great idea. And real estate investing, for those of you listening, if you're new to this game, real estate's a great idea. The second thing they had is that the successful plans, they all had a way to monetize, meaning there was a way for the owner to get paid. Because here's the problem for most of us as real estate investors when we start out. You get all excited, you go out, you don't have any money, but they kind of taught you to forget about that and just move forward, right?
Right.
And so you go start doing deals. And here's the problem. With no money, there's an exception always, but with no money, the reality is if you're going out and finding a deal, you're looking at 90 days to 9 months before the deal's completed from start to end and you actually receive a check. And that's just way, way too long for most new people to make it. That's why there's such a tremendous drop-off rate in the real estate investing, in my opinion, is that it takes too long to get paid. So financially, it's hard to hang in there, but also emotionally and psychologically, it's really hard to hang in.
Yep.
And it's almost impossible to get your significant other, your friends and family to stay with you while you're doing all this work and receiving no money.
Right. You're the last person to get paid.
Yeah, you're the last person to get paid, which makes no sense, and it violates everything for a successful business.
Right.
And the third thing successful businesses have is they're funded. They have capital. They have money. So I mean, if you're going to do a normal business, here's what you do. You'd have your great idea. You'd write it out. This is what I'm going to do. I'm going to be a real estate investor. I'm now going to set up a system where I get paid right away up front because obviously the lender and the banker and everybody else, they're not going to give me any money if I can't eat. I mean, I have to be able to pay my bills.
Right.
And then I go raise the money. Then I go into business. Real estate investors are taught to do it completely opposite. We're taught to put the cart before the horse. We're taught to go out with no money and very little probability of getting the money, even if we find the great deal, or paying exorbitant rates for the money and then going and get the deal. So what we teach people is like, look, stop the madness. Don't do what everybody else is teaching you. So first of all, most people aren't rich and aren't successful. So it's pretty obvious if you're doing what everybody else is doing, you're going to get a similar result. Agreed?
Yeah, sure.
Okay, so obviously I looked at not what successful real estate investors were teaching from the stage. I looked at what were successful business people doing for real. And what they did for real is they got paid first and they raised money first. And that's what I had learned from the Wall Street side. So that's what we did. And the cool thing, what I had learned that I brought into real estate is that in Wall Street and all the other financial services but the real estate investor, nobody ever works without getting paid first. So you talk to a stockbroker, First person who gets paid when you transfer money is the stockbroker. He actually
Right.
takes the commission out before he buys your property, before he buys your investment.
Yep.
You know, the fund broker, the FX guy, the currency person, the commodities broker, all these people, everybody in financial services gets paid first, except for the silly real estate investor.
Yep.
And so what we do is what we teach people, look, if you don't have any money, stop wasting time looking at real estate, stop surfing the internet, stop driving the neighborhood, stop wasting your time pretending you have a business because you don't. Learn how to raise money first, like every real business does. As you raise money, you get paid every single time you do a transaction up front. So not when it closes escrow, not after it's rehab, not when you resell it. The day you get the money, you get paid.
Sure. So talk a little about the structure of that, John. Is this traditional kind of debt that you're basically just kind of borrowing against what you have to pay back eventually, or?
Well, actually, we look at it a different way. There's a couple ways we can do this.
Or are the people you're borrowing money from and equity partners as well? Yeah.
Yeah, it's an equity situation. So there's different ways we can do this. So the most complex way is there's several different security models we could do, a 504, 505, 506. We could do a fund model. For most of you, that's going just put it aside. And you heard some fancy buzzwords. Don't worry about them because they're not what you're going to do. There's also a mortgage model. Mortgage model requires licensing in some states. In most states with repetition, you have to license, and there's different fundamental things you need to make. What we find works best for most people, what we've done primarily, is the JV model, and that's the joint venture model. That's where, Mike, you and I can get together and we can do any form of business we want and have it not be a security as long as we both know each other and we have a relationship within what's called a sphere of influence, correct?
Okay. Yep.
Made much easier if you're an accredited investor because there's even less disclosure involved, but you don't have to be accredited. So think of it this way. Someone listening right now, you could go into business with your mom or your dad. You could form a business and you could do anything you wanted. You could open up any kind of store, any type of business, and it's not a security and there's no issues. We do the same thing. We just do it with real estate. So we form a joint venture agreement. We split the profits down the middle after all the expenses. I'm fully responsible for managing the investment, whether it's good or bad or indifferent. I have to manage it. If it doesn't make money, I have to manage it for free. So there's a lot of benefits for my investor. I'm also going to actually manage it like an owner because I am.
Right.
And the better it performs, the more I make. And so with each transaction we do, I get an upfront fee on every single property that we do. And then we split the profits 50-50 for the long run. And we've done this on a large number of our transactions because it allows us to do more and more deals. And it's a JV model, and it works fantastic.
And does that work? Does that model work as well, you think, in a lower volume? I mean, if you're doing higher, if it enables you to do a lot more volume, of course, you can make your profit up. If for people that are out there buying, you say 5 to 10 houses a year, does that model still make as much sense?
Great question. It actually, in many ways, makes more sense. So a lot of my investors start out part-time, and they only do, a lot of my students, they do maybe 2, 4, 5 deals a year. They're not looking to do a bunch of deals. They're just looking to do some deals. They're looking to build a future. They'd like to make a little bit more money today.
Right.
And what they found is their initial plan was they're like, we're going to flip the houses. And, in flipping, we hit home runs and make $20,000, $30,000, $40,000, $50,000 on some deals net. But that's not our normal deals. Normally we make less than that, especially once you put in your overhead, your costs, and your expenses. And I know you work with home investors, so you know the true net per deal is way, way, way less.
It's not what they show you on TV.
It's not what you show on TV. Yeah, I found out a long time ago that TV is actually not real. And there's
but it's called reality TV,
which is the most unreal shows in the world.
Yeah,
I know several people who do reality shows. You'd be stunned how unreal they are. It's almost entirely staged.
Yeah.
And so what we found is that a good flipper is looking to make $6,000, $8,000, $10,000 net after real expenses on a deal, and we show them how they could do a deal, never have to flip it, keep it, and split the profits 50-50 and get $10,000 up front. And so that's what we do. We charge a $10,000 fee for finding the deal below value, rehabbing it for below cost, and putting a resident in the property for above market rate. We charge $10,000 to put that up. That's our fee up front for services rendered in part of our JV agreement as the partner who's doing the work. And so we get paid up front. So the student who's only doing the 2, 3, 4, 5 deals a year, they're making 20, 30, 40, 50 grand a year now in their pocket. So they've monetized. So they've gone from the great idea of real estate investing to the second key component. They've monetized. They've actually got paid today.
Right.
Because of that, most people find with a lot of their properties, if they got 10 grand up front, with a lot of their properties, they'd never flip them.
Yep.
that a lot of the properties that people flip, they flip because they needed money.
Yeah.
And if they had money, they wouldn't have flipped them.
Yeah, that's a big trade-off. I can tell you as an investor, I mean, when we've kept, we have a rental portfolio, but we would have kept more if we didn't kind of need the money to feed the monster. And, we never followed a model like yours. We basically, it was a sacrifice to put those rentals away because we weren't structured the way that you're talking about.
Absolutely. I mean, and I haven't flipped since 1990. So it's 25 years, literally.
Yeah.
And I still, at least once or twice a year, make sure and drive by a couple of the properties that I flipped in 90, that 25 years ago. I drive by a couple of those to remind myself how much money I made somebody else for all the work I did.
Yeah.
I did all the work to put together the deal of a lifetime, and then I handed it to somebody else, and they gave me a little teeny bit of money. And if I had been applying what we're talking about today, if I had charged the $10,000 fee for property, as many properties as I buy, I would have never needed to do it. So for many of my students, they make, on top of all the money they make on the real estate, they make tens of thousands or hundreds of thousands. Some of them make millions of dollars a year in upfront money just for putting the transactions together and then still getting to own half the long-term back end.
Yeah.
And, flipping's great. Occasionally people say John Burley's anti-flipping. I'm not anti-flipping at all. Flipping is great. But there's a reason why a guy like Warren Buffett never wrote a book called Flip and Grow Rich. Because I know we're on Flip Nerd, but the reality is you're not going to ever get rich flipping. You can make a good income. You can make money to take care of your past, your problems, and give you seed money. But if you really want to be rich, you can't flip. If you want to be rich, you need to own and control assets for the long term that will provide you an income stream.
Sure.
Because the challenge of flipping's like any great high-paid job. If you don't go to work, you don't get paid anymore.
That is true. Yeah. Once you can make a bunch of money, but the next day you're never going to make a penny off of it again once you sell it. So.
Absolutely. Yeah. I mean, and so, so like Michael Jordan, when he played basketball for the Chicago Bulls, that would be the equivalent of having a flip contract. Right. But he was smart enough. He set up enough long-term cash flow deals from endorsements that are far more than he ever made flipping and continued to pay him for all of his life.
Right.
And so from a real estate vernacular, that's what we're looking to do. We're looking to create income up front to pay our bills, feed ourselves, take care of our needs. 'Cause I remember what it's like to be new and have those short-term pressing issues that I don't have today. And then at the same time, build the long term. So what we tried to do was like the best part of flipping was money today. And that was a great part. The bad part of flipping is I gave away all the other good stuff of real estate. Make sense?
Yep.
And it's like I didn't want to give up the good stuff, but I needed to be paid today. And so it was kind of like I was struggling with it. And then it's like, I'd been in the business full time for about 9 months. And I'm like, John, you're about as stupid as it gets. You came out of Wall Street. You know how to monetize. You know how to get money up front. Why aren't you doing it in your real estate transactions? And it's like, well, no one else ever did it.
Sure.
Like, well, just because nobody did it doesn't mean it shouldn't have been done that way. Just nobody who was teaching had come out of my background to know how to do it.
Right. So, John, talk a little bit about the structure of kind of these JV relationships. Just give an example of kind of how that works.
Yeah, it's very, very simple. We use a JV agreement. You can draft them up. We have documents, obviously, that we use that we provide for people. But it's a very simple JV agreement. It basically is we're going to set up an LLC. For most people, it'll be a limited liability company. That limited liability company will be run by the operating agreement and the JV agreement, with the JV agreement having control. I like doing it that way because the JV agreement's not recorded publicly, and many disclosure states require you to record your operating agreement these days. So we don't want anybody to have all the details of our transaction. Make sense?
Right.
So we have the JV agreement. The JV agreement just outlines what the capital investor, the money partner, is going to do, and what the managing partner is going to do. So the capital investor, they put up all the money. They sign for loans if you're doing it with loans. There's a reserve we set aside up front because reserves are prudent. All real businesses have them. Real estate investors usually don't. So obviously we do. Real estate investing, once I got the model down, it was pretty easy to figure out what would work. Just looked at all the other people, what they were doing that wasn't working and what their problems were, and fixed it. And they were always the same. I don't have money to do deals, and I don't have money to finish my deals, and I don't get paid up front. And if something goes wrong, I don't have money. So, all the real estate problems were money, 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 and money.
Right.
So it's like, okay, let's just do what real businesses do. Raise the money first, have the money there, and then do it. So we do a simple agreement. Between us and that, it spells out everybody's duties, what they do, what they're involved with. It shows the split. It keeps us morally, ethically, legally, lawfully, on the white side of the law, so that what we're doing is right and proper at all times.
Yep.
Sets it up specifically so it's not as a security. Some people go more advanced and they do want to securitize it. Security, by making a security, it just opens your marketing capabilities.
Sure.
Because contrary to what's taught, you can't go solicit money from strangers who are non-accredited investors without having registered and filed in your state as a security or non-security. And we teach the technical details of doing a 504, 505, 506.
And of course, those things have changed a lot recently with Reg A Plus just here last week, I think, and a number of other things. But I understand.
There's been some great stuff for us that make it easier, but there's still compliance, dot the I's, crossing the T's. So we have a simple model that we start with for most people, where whether you want to do 2 deals a year, which is 20,000 in half the deals, or whether you want to do, I have several students who do 50 to 100 deals a year, where they're making $500,000 to $1 million a year upfront fees, plus then all the real estate. And the real estate's more money in the long run.
Sure. So talk a little bit about in those typical structures. I have a couple questions. So one is, I assume one of the challenges with partnerships is when one wants to sell and one doesn't, and all those things are kind of defined in your JV agreement. I assume the managing partner gets to make those decisions, and is that typical?
What's really important that we do, and there's a lot of questions there, and one of the neat things is I've been doing this for 25 years, and I literally have students. I mean, I was a student, Steve, who did this over 500 times. Another guy, Joe, did it over 600 times. Lady Felicity did it over 200 times. So I have all my experiences, plus all these students who've done hundreds and hundreds of transactions who, when something didn't quite go how they wanted, I was one of their first phone calls. And then we'd walk through it and we'd come up with the best solution and be like, okay, well, we're going to now add a couple sentences to paragraph 27.
Right.
So the agreement's gotten beefier and, remaining streamlined, it's gotten beefier and got the stuff in there. So what we do is again, we want to make sure it's a business model, not a security model. It's a business model. What we're really focusing on, it's a partnership. So on the day-to-day, week-to-week, the managing partner, the investing partner, not the money partner, but the managing partner, we have control and we make decisions. On all major decisions, there's a consultation with the investor and we decide. And then there's provisions for, a sale. There's provisions for that. There's provisions for buyout. There's provisions for, almost always amicably there would become an agreement. But if there wasn't amicably an agreement, here's how we default and what we do.
Yeah.
And that's just business stuff. It's like, I learned a long time ago, the only people you do business with on a handshake have learned the hard way never to do business on a handshake.
Right.
And the guy who wants to do business on a handshake, you better run quick.
Yeah.
Because you don't do business on a handshake with them. So we for our students, we provide the documents, we dot the I's, we cross the T's. Been through over and over and over again, tested how it works.
Sure. And from the money partner side, John, it would seem like the big opportunity is the acquisition side. People are finding the deals. A lot of times the two biggest limitations in my experience in the real estate space are finding the deals and then finding the money, because there's not an unlimited number of deals out there. So talk about in those models, who's finding the deals? As the managing partner, are you the one finding the deals?
Yeah, so the deal is fantastic from both sides. From the money partner side, they have the money. And like most people have money, what comes with that money also is they generally work full-time and a lot of hours. Right. And they don't have the extra time. So most of my investors have done a few deals. They know real estate works, but they also know the reality is to really find a great deal, to really rehab it for under market rates, for really to put a great resident in, to manage that, keep the resident in there for the long term, and make that thing churn and work over and over and over and over again, they know it's a lot of work. And so what they found, it's like what Robert Kiyosaki and Kim Kiyosaki found. They found giving me half and letting me manage it, they made more money than they did managing it on their own.
Sure.
Because I have the time, the expertise. It's what I do as a specialty for my investors. So I find better deals than they're going to find on their own. Most of our deals right now we're buying are off market. They're not on the multiple listing service. We're buying off market with almost all of our deals, which is where traditionally the good deals always have been, is off market. I mean, the good deals are rarely on the multiple listing service.
Right.
We make offers literally every week. We buy properties every month off multiple listing service, but that's not where we get most of our deals.
Sure.
Most of them are off market.
Right.
So we find the deals that our money partners would never find otherwise. We actually give them a rate of return that's superior to what they get on their own. And the other thing is we're actually fulfilling their need. So when most people go talk to somebody to be a partner and give them money to do a deal, they're asking for what they need, and they're never really understanding what the other person needs. So most people who are rich have zero interest in flipping. They're already in the maximum tax bracket. Their problem is they have too much capital that's not working now. The last thing they want is to do a deal, pay the maximum income taxes, and then have more cash that's not placed properly.
Right.
Yet, the real estate investor who's new, who's hurting for money, they're thinking flip, 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 because they're thinking about their needs. I need money today to pay my bills. My investors don't need money to pay their bills. They want money so that they can retire early and get a check every month for the rest of their life from me, which is what we provide.
Right. So, John, share your thoughts on one of the challenges in my experience, and just is that a lot of new investors early on, they have a hard time raising money or finding money partners because they're inexperienced. They don't have a proven track record yet.
Right.
And then once they get experience, it doesn't even have to be a lot of experience. It's easy to raise far more money than you could ever apply, because if you find somebody that's wealthy, they're like, hey, that sounds great. I'm excited. Well, I've got $3 million to spend. And they're like, well, I only need 80,000 right now. Can you just set the rest of it aside for me and don't touch it until I need it? I mean, kind of talk about that phenomenon, which I think you probably agree is a very real issue, right? Once you tap into the so-called mother lode of somebody that has a lot of money to spend, they want to apply it, right? They don't want to apply it over the course of many years.
It's really important you understand the psychology of investing and deal flow and money flow. So we're gonna jump in a little advanced right here. The main things that I understand so well, in addition to how to do a real estate transaction, finding the right deal, the nuts and bolts, that's all very easily learned. And then when you put 30 plus years of experience, meaning you've made a bunch of mistakes, you know what works and what doesn't work, because you've already screwed it up enough times, you've figured it out. What I need to do is I understand with my investor, with anybody I'm in business with, I need to meet their emotional needs. And there's two types of emotional needs. There's your emotional needs that you're aware of. There's your conscious emotional needs. And then there are the emotional needs you're not aware of. There's your subconscious emotional needs. In regards to money right now with the wealthy people in America, the subconscious emotional needs are what's not being met. So right now you run into people all the time, and this is their story. I don't want to, I want to get in, I want to invest, I need to get this great return. They want 10, 12, 14%. They want these really high rates of return. And there's tons of people that offer these returns. I'm not saying they deliver them, but they offer them. And there's a big difference between delivering and offering, right? Yep. But there's tons of people that offer it, yet these people don't do it. So most people I meet with, they have $600,000, $800,000, $1 million, $2 million, $4 million, $8 million with 90% of it in cash. They literally in 8 or 9 after the crash took their money out of the market and moved it to the money market account, and it stayed there and remained there the whole time.
Right.
And this is what you need to understand. The wealthy, most people in this country that are 50 to 75 years old, their number one concern emotionally right now on a subconscious level, their need is, I don't want to ever lose money again. And when you talk to them, they say things like, well, I lost a third of everything I ever made. It's like, the facts are they didn't. The fact is they lost a third of their investment account, which was about 8 to 10% of what they made plus compounded. So it's nowhere near a third of what they made, but you can just see the emotional.
Right.
So they'll talk to me all the time. They're going like, look, I don't want to lose money. I don't want to lose money. But they're not saying that. They're saying, I want this rate of return, this neighborhood, this type of property, yet their money's sitting in cash. So what I do is I've learned, and what we teach is there's 6 talking points. So I go through and I go through the talking points. I meet their subconscious emotional needs. When I meet their subconscious emotional needs, the checkbook comes open and then we can place. Then when I place, I'm not placing for me. So in other words, I'm not going to take your 80 grand and buy one house and flip it and give you back your 80 grand plus 10, because that's not what they want.
Right.
Just real quick, what they want, there's 6 things they want. Number 1 is safety. They want their money to be safe at all times. They do not want to take a loss ever. And we teach very specific questions that you answer when you do your presentation. When I teach people how to go raise money, you don't talk about real estate because real estate's irrelevant. You talk about the emotional needs. The first emotional need is safety. And you say things like, well, tell me, Mike, when I talk to other investors such as yourself who are very successful, they tell me it's important. Actually, they tell me it's paramount that their money be safe at all time. Would you agree your money being safe is important to you? Every single human being who's got money is going to say what?
Yes, yeah.
Yes. And it's like, well, why is that important to you? Has your money never not been safe? So we go through safety. That's the number one need of about 75% of the people. And no one's offering it. They're offering rate of return. But so having my experience, I've been through many markets. If the money is sitting in cash, rate of return is not what they need on a subconscious level. Because if they needed rate of return, The money wouldn't be in cash. It would be somewhere.
Right.
Make sense?
Right. Yep.
So in 2004, almost all my investment partners that came on, we were 1031 exchanging a fourplex. We were selling stock in AT&T. We were selling another asset to move it into what they believed was going to be a better performing asset with me. Make sense?
Yep.
Today, 99% of the money is coming out of cash to go into the new investment. So obviously, safety's their conscious list doesn't have safety, but their subconscious emotion, who I have to know how to talk to, subconscious emotion says the money's got to be safe or I won't place it with you.
Yep.
Yeah. Number two is security, and then they want, this is what we need to understand. It's not about us; it's about them. Most real estate investors, you want money now, but your clients want money long term. They want the money. What they want is they want to be able to give you the money, have you place it, pay you to take it. People are like, well, why would they pay you to take it? Every other investment they ever did in their lives, they paid money to the person who invested it for them. Quite frankly, if you don't charge, subconsciously something's wrong and there's a red light going off, because every real financial advisor charges. If you don't charge for the advice probably isn't very good.
Right.
So the real estate investor, you got to understand the psychology. They're used to paying money, and they've always paid money for every good investment they ever made. That's how they do it. And then, what they want is they want long term. They're not looking to get rich. They're already rich. What they want to do is they want to take the $2 million that's sitting in the cash account, and they want to turn it into 15,000, 16,000, 20,000, 10,000, so many thousand a month, so that they can then retire.
Right.
So that's what they want. They want long term. The fourth thing they want is they want cash flow. They want an income stream that's going to come in every month, month after month after month, not just a flip deal. So I don't do flip deals with these people. And so they place the money. They give me the money. We then buy the deals. We're able to burn the money in faster because we're not flipping it. So the money's not coming back. It stays. Yep. With many, we leverage. With others, we don't. If we leverage, it's 20, 25% is the normal loans for people who are buying a lot of real estate. We're not doing low down, no down deals with them. And they don't want that because they want to place the cash. So we understand from a money flow point of view, we've got to burn it. From a deal flow, what I've got to learn is I've got to learn that when you're doing a lot of business, look, if you're doing a couple deals a year, go for as good as you want, as much as your psychology will allow you to take the rejection of being turned down on most offers. But for most people right now, most markets right now, sure, we're not at the bottoms of 2010, but we're also below historical values. We're below construction cost. And with the low interest rates, we're way below what the monthly should be on a historical normal level. So most deals, retail, are pretty good deals for the average investor. Agreed?
Yep.
For a long-term hold. I mean, they're going to rent positive cash flow.
Right.
And so, what I tell people, look, if you're trying to place a lot of money, you can't get a deal of a lifetime on every deal. So if I've got several $1 million to place in a given month, which would not be abnormal, I can't be getting every deal the most spectacular 30 cents, 50 cents, 60 cents on the dollar deal. I'm looking for good, solid deals that give me good, solid cash flow so I can place the money. Because I've got to place the money, because today, once money commits, if you don't place it, it goes somewhere else. A couple of years ago, it wouldn't go anywhere else. It'd still wait for you, but it's not waiting anymore. Right. Because the psychology's changed. And then, so we give them safety. We give them security. We give them the long term. We give them cash flow. They want the tax benefits that real estate offers, and then we give them a good rate of return. Okay. And then there's an upside to the property, but you don't want to talk about appreciation and growth because that's what got them in trouble last time.
Right.
So what we've learned the subconscious emotional needs of our investor. And I did a 30-minute presentation in 10 minutes, and we literally have an audio program that's 3 days that does the presentation broken out step by step. So there's a lot more to it than that. But what we do is we're meeting people's emotional needs. They invest with us because we're giving them what they want. They don't have the time to do it on their own. And quite frankly, these days, people are tired of being burned by people who don't have a vested interest in the result of their investments.
Yeah, I mean, you're aligned, so you're working with people that, in the event that the investment doesn't work out, you're going to miss out too, obviously.
Yeah, the only way I get paid well is I got to make the deal sing.
Yep.
And I got to put up with everything bad. So one of the big things we strive for in the office is don't buy any lemons, because for the investor, they just make a little bit more little less money. For us, we have to do a whole bunch more work for years and years and years and years. So it's like we really strive to only buy deals that are good.
Yep.
And just consistently do it. So, we do a larger volume than most people, although a lot of my students do volumes bigger than mine. Some do larger volumes. So we have many people, that are doing that 50, 100 plus deals a year, which is a lot more if you're keeping them than flipping them. A lot more work to keep it than it is to flip it.
Absolutely. So, John, if you could just take a couple minutes and kind of give people advice on how do they, I know you have some training programs on this, but how do people get started? If this sounds interesting and they're like, wow, it's a different model than I've thought of before, obviously.
Yeah.
And I want to kind of get started in this. How do they, who do they go after to try to find people to work with? Probably people that are in their network already even.
So what I recommend you do is you go to your sphere of influence. And we teach a presentation. You learn the presentation. You go to your sphere of influence. When you go to your sphere of influence, keep in mind it's not about real estate. It's about meeting their subconscious emotional needs. That need is primarily safety. You share with them the opportunity and what you're doing. You bring them on. You have them to go. For most people, you already know enough people to do it. I hear people say, I don't know anybody rich. And I'm like, really? You've never been to a dentist once? Well, I've been to a dentist. Okay, that's one. If they're did your wife, you have children, right? Okay, so your wife's been to an OBGYN, that's two. I mean, we all do know some people who would have interest if we had something that met their needs.
Right.
When you walk in and go, do you want to invest in real estate? Almost everybody's going to say no. Of course, because you asked the wrong question. It's not about real estate. Just like a good stockbroker doesn't call up and go, do you want to buy stocks?
Right.
They talk about your needs and they lead you to it. So we teach that model. We teach about matching with people and just finding people who want to do this with you. And, when you're new, seriously, look, stop pretending the money's not important. Stop pretending that the problem will go away. It never will. Okay. The businesses that are successful, here's what they figured out. I've got to monetize. I got to get paid today. And I've got to have the money I need to continue to do business for the long term. Having a great idea is not enough.
That's true.
And, when I talk to real estate agents all the time, they're like going, oh, you're one of these real estate investors. I get the same gunk everybody else does. And they're like, oh, well, you guys are, you're looking, it's a pipe dream. You're looking for a needle in a haystack. And if you were my realtor, I was talking with Mike, I go, hey, Mike, here's the deal. Mike, I don't want you to find me a needle in a haystack. Here's the money I have, and I'll show them the bank account where we have the investor's money, right? So I've got 800,000 or $1 million or $5 million or whatever it is at that point in time. Here's real time, all this money in the bank. I don't want you to help me find a needle in a haystack. Here's what I want you to do. I want you to help me find some haystacks wholesale. I'll find the needles all by myself. And when realtors see real money, cooperation changes entirely.
Yeah.
We suddenly have best friends everywhere. And then you sort through the real estate agents who can really find good deals and the ones who can't. But there's a lot of agents that find really good deals, but they only work for people who have money.
Right, right.
Because if you're really good, why would you work for somebody who doesn't have any money?
Yep.
Yeah.
Yep.
So I've got agents on my staff and agents we work with outside, but none of them work with anybody who doesn't have money for real up front.
Yeah. Awesome. Well, John, if folks want to learn more about you and what you've got going on, I know you've got some events coming up and training programs. I mean, where should they go?
Yeah, thanks much, Mike. Go to johnburley.com, JohnBurley.com. So johnburley.com. You can check out our website. You can also go and call us at 1-800-561-8246. So 1-800-561-8246. We do a flagship event once a year. Next one's in 2016, and we'll be doing the 24th annual Burley Boot Camp. I also do 3 events a year. One's coming up in a couple of months. The events are all different and all unique. So we were talking about this before we started. I don't do the normal seminar model where I have these filler events to upsell you to the big events. We don't do that, crud. I do 3 unique events every year, and they're based on what's going on in the market right now. I have people who've been coming to events for 5 to 20 years, literally. So when you come,
wow.
Those of you that have been to events, it's pretty cool for the student's point of view because about a third of the audience are hitters. They're making a lot of money. So I always joke to people, look, when you're in the bathroom, you don't want to talk about it doesn't work because the guy next to you in the stall might have 80 houses.
Yeah.
Because we just have a lot of successful people in the room. So they're very unique, very, very high-end content, but we slow it down enough to where the new investor will pick right up and move in the flow with us.
Great. Well, we'll add a link down below the video here for those that are interested in learning more. John, thanks so much for your time today. Definitely appreciate spending a little bit of time with you.
Been awesome. I appreciate it. Thank you very much. This is John
Have
Burley.
A great day, my friend.
Yeah, I want to say to everybody out there, thank you and God bless.
Thank you. Are you a member of FlipNerd.com, the most robust real estate investing platform in existence, where you can find off-market wholesale deals and great vendors literally in your market? You can get access to advice from experts and learn about local clubs and events right in your backyard. If not, please visit FlipNerd.com and register for a free account. You can register in less than a minute. It's pretty much the coolest site that's ever existed in the real estate investing industry. So get on over to flipnerd.com.